What's up, guys? It's April 26th, 2024. Bulls had a sideways day. I guess the market had a sideways day. Yesterday was pretty climactic price action, but Bulls got follow through. We closed below yesterday's low, which is not good for the Bulls, but more bullish price action for the day. Doesn't mean we're bullish. We could be trading at the high of a range. EMA might be resistance now. We don't know. So I'm going to go through each bar and where I think the buyers and sellers are, and we'll talk about the market cycle and leg one, leg twos. Yesterday's price action, it was climactic, bar 79, climactic, follow through with 80 and 81. 81 is bad follow through, but it's not a bear body. Today we gapped down, testing the 50% level of bar 70. What did I just say? 79. So like if you go body to body, kind of, I checked it, almost testing the 50% level. Wait 2 seconds, I'm about to cough. Sorry about that. So yeah, almost testing the 50% level. Bar one is a, whoa, my mouse is moving so fast. Okay. Excuse me. Bar one, bears trying to sell, bulls get the reversal. I think there are more buyers sitting at the mid-level of bar 79. Bar two, bulls get the breakout above bar one's range. Delete this. Let me turn off the prices. Okay. So bar one's range met 1R. Let me turn off 2R. Okay. So yeah, bar one's range, 1R is met with bar five. That's all I wanted to see. The breakout was good. Bar three is a pullback. Bar four is breaking out. This is the first pullback, so that makes bar four a high one. I think there are more buyers. Usually there's more sellers above a high one, and a high one is the start of a channel, a bear channel. But if the context is good, high ones are context dependent. Strong gap up, momentum. This is a high one. It's good. Looks like bulls took that for a scalp right here. That was met with bar five. Good follow through, and bar six is another pullback. There are no lows being breached, so all lows are trending. But opposite bars can be compression. It could be a flag on another chart, so it's a form of a leg. Bar seven breakout. That's 3 legs now. Leg one, pullback leg two, pullback leg three. A lot of trending behavior with the first 6, 7 bars. Bar eight shows the bears tried to reverse it. It sold off, and the bulls reversed at the high of bar. What is that? 8. Wait, no, 7. Excuse me. This is 8. So 7, 8, 9. Bar 9 breaking out above bar 8's range. Bar 10 is bad follow through. Bar 11, it's a sideways market. That's a range bar with closing on its high. Bar 12 looks bad for the bull case. I think there are more sellers sitting above yesterday's high than buyers. Bar 13 reverses. Also, bar 12 is the first time a low is broken. When a channel is broken, it could be a good fade to the previous extreme. But we got to think, is this climactic price action? Because we're in the third leg, so it might be better to just wait for the EMA to get touched or wait for a new breakout. So bar 12 breaks the micro channel line here with the trending lows. Bar 8 comes, oh, actually, excuse me, I missed this. Bar 7 is the first lower low. So this is right there. And then that's like that. Because that's the bar 7 broke bar 6's low. The wick. So that's a trend line break. Trending lows, trend line break. We get trending lows, trend line break with bar 12. Bar 13 reverses and looks like bulls go for a fade of the highs. There's a micro. There's a fractal leg 1, leg 2 right here. Bar 13 and 14 pull back. 15, this is 13, wait, 12, 13, 14. I'm getting used to counting with 3s now, excuse me. That's why I'm missing one number. I'm used to counting with 2s. So 12, 13 reverses. 14 bad follow through. 15 looks like it's a pullback, testing the 50% level of bar 13. So we can check that real quick here. Let's check. Bar 13, bulls pull back into bar 13's 50% level and take off. They tag the highs and go for the breakout. Bar 16, 16, 17. Reverses down and reverses back up, testing the high of bar 12. Bar 18 is a bad bar. It's a indecision at highs. It's kind of a few pushes higher now. 1, pull back 2, pull back 3 with 19. 19 doesn't look good because it's a bull body closing on its low. So there's more sellers sitting above 19. But it looks like there's also buyers sitting on the EMA. So sellers above, buyers below. I think there are more sellers here. I think there are more buyers here. Bar 19, so 18, 19, 20. Bar 20 looks like a 2-bar reversal and it vacuums into the EMA. Bar 21 is a bad close for the bears. Bounces off and the market goes sideways, trying to create a bear flag, but it ends up looking like a bull flag. There's more bullish price action. Bulls have control over the market. They've been trending since the open. This is for the first touch of the EMA, and you can see this pullback led to a shallow, like it was a rally, but it was a weak rally. It was a lot of overlap. Here, first pullback, big breakout. Bar 27 is breaking out of these 4 bars range. Bar 28, bad follow through. 29, market starts to pull back into the EMA, spike, pullback and channel. Bar 30 gives a pullback for the bears, so it's leg 1, pullback leg 2. Bad close for the bears with 31 and 32 show that there are still more buyers on the EMA, whereas I think there are sellers up here, more buyers down here, and we can see that through the tails here. 33 is a good bull bar above yesterday's high and above the EMA. So this bar above this high and above the EMA. 34, the market goes more sideways, so we're sitting right here. 35, bulls get a bull body and starts to trend higher with 36 and 37. Not the strongest closes, but the lows are trending. 37 breaks the low of 36, so that's not good. The body closes are still trending. 37, 38. Strong bull body, and it goes sideways. So the bulls make a new high, and the market went sideways. They were taking some profits. Bar 39 was a pullback. It didn't break the lows, so the lows are still trending with 38. We're still, this is all a leg. This could be the break of a leg, so we can see leg 1, pullback leg 2, pullback leg 3. Market goes sideways, tags the EMA, bulls take over, spike and channel. It's hard to count legs in a small pullback bull trend, but I'm just looking at the lows being taken out. 38 looks like the bull flag is forming here. It was up. Compression. 41 starts to break out. 42 is a really strong bull bar. No tails on either end. However, there's bad follow throughs, so that's not good for the bulls with 43. 44, the market starts to sell off. Well, the bulls, it doesn't start to sell off. It starts to compress. The lows are still trending. We're getting way more overlap than trending behavior. These are range bars, but the lows are trending. Highs are not trending, you know. The highs are trending, but the lows, no new lows are being made. New highs are being made, pulls back, no new low. New high being made, pulls back, no new low. It's a tight TTR. If you don't know what to do, it's just better to just sit out or buy the market and just hold for a couple points. But it seems like the market's having a hard time above yesterday's high. I think this really took some steam out the market yesterday. Need some time to, well, if this is a breakout, we channeled, right? This is a pullback. We channeled higher and now we're ranging, so the market cycle could be resetting. 51 sells off into the EMA. 52, we bounce off and test the highs. 53, double top, and that sells for a few legs lower. 54, this is the first time bulls did not make a new high. Bears are starting to make get a bar below the EMA. 57 is the first bar that bears got. No, excuse me, it's not. 55 is the first bar that closed below the EMA. 56 is bad follow through. 57, the market reverse on the EMA. 58 looks like a nice bar for another leg down. These are all not. 57 broke the high of 55, so leg 1, pullback leg 2. Very bad. Look how, like, a lot of overlap, not good bear bodies with the bars. 58 and 59. 60, or no, excuse me. This is 58, 59, and 60 is pretty bad too. 61, strong bar, but bulls keep the gap open that broke out earlier. They're keeping the gap open between yesterday's high. That's not good for them. Give me 2 seconds, guys. That's not good for the bears. That bulls are keeping this gap open. 63 looks like a good reversal bar. It's not necessarily an outside bar because they're sharing lows here, but they close above 61's high. We go sideways, creating a bear channel. There's just 3 pushes down, leg 1, pull back leg 2, pull back leg 3. So wedge bottom. 66 is an outside bar. It goes below 65's low and trades well above it. And then we go sideways again for a few bars. 67's bad follow through, 68's a bull bar, 69's a bear bar, 70's a bull bar. So it's just oscillating. This is a tight trading range. Bulls trying to get the breakout with bar 71. 72 is good follow through, but then 73 reverses. 74. Bears are getting another close below. 75. Bears vacuum down into yesterday's high, which is not good for the Bulls because they were trying to break out above yesterday's high, and the market ends up closing below. Leg 1, opposite bar. Leg 2, pull back sideways. So where are we in the market cycle? From this perspective, I think the market had a wedge top here. We broke out of the wedge top. This gap down signifies the first pullback. Bar 1, Bulls pick it up, and now we're channeling. Leg 1, pull back leg 2, pull back leg 3. That's 3 legs in channel. So what happens after a channel? The market goes sideways. When the market starts to go sideways, bears are going to want failed reversals as targets. So this bar 3 is a failed reversal, so bears are going to want that. Bar 6 is a failed reversal. Bears already got that. So we were range bound from here with slightly more bullish price action. But we were range bound for most of the day. Let me draw a box. See. So was today really a trend day, or was it more range? I think it was more of a range day. Buy low, sell high. Let me get rid of the tool. So look, that's pretty much bar 7 was the low of the range. So right there, pretty much bar 7 is the low, and bar 49 is high. We were ranging, so we broke out here. Look, no overlap, right? It's one clean breakout, deep pullback, and we channeled, and the channel is the first leg in a range. So this channel was the first. So we were ranging here, but we didn't know it, right? Because the market's in transition. So channel and then range. Hope you guys had a good weekend. Hope you guys studied. I got a lot of studying done this weekend. I'm pretty stoked to be trading again. I'm taking it easy. I traded a little bit today. I'm gonna just take it really easy and slide this in. I'll be trading 4 days a week: Monday, Tuesday, Wednesday, Thursdays, and I'll be working Friday, Saturdays. I gotta like that schedule. I think it'll be good. And then I'm gonna just keep trading small. I'm getting real scalpy. I like it. Hope you guys are doing good. Keep studying. Keep using your stop loss. Drop some questions. Tell me what you guys are trading. I'll talk to you later. Bye. Drink some wine if you're of age. Don't drink and drive.